Hi, this is Marie from Legacy Publishing. Today we are going to focus on the monthly dividend strategy. Chuck, I noticed from your account statements that you have been active lately with the monthly dividend strategy. Can you tell us about the strategy and how it is implemented?
Marie, we discussed the monthly dividend strategy briefly in our last video, which focused on the gold and crude oil ETFs. The strategy is initiated by purchasing stock and selling a monthly call option to generate cash income. Options lose all time value at expiration, and options lose time value very quickly during the last month prior to expiration. So selling monthly call options allows us to take full advantage of the time decay characteristics of options. The strategy can produce profits if the price of the underlying stock increases, remains flat, or even decreases. When you sell a call option against your stock, cash is immediately credited to your brokerage account. So selling monthly call options against your stock is a great way to generate monthly cash dividends.
Chuck, can you show us an example of a monthly dividend trade?
Marie, my brokerage confirmation shows that last month I purchased 1,000 shares of U.S. Steel at $43.72 and sold 10 of the U.S. Steel September 45 strike calls at 2.32 points. These options expire in 1 month. This created a buy right trade, and the sale of the 10 calls at 2.32 points resulted in $2,320 in cash being credited to my brokerage account before commissions. Now, when the September options expire this Friday, I will roll over to the October options. This can be done with an option spread order to close out the September 45 call and sell the October call. This buy right analysis shows that the profit potential on this trade is $360 per contract, which results in a 8.7% return at option expiration if U.S. Steel closes at or above the 45 strike price. Now, the overall goal of this strategy is to sell monthly call options against my U.S. Steel stock to generate monthly income. The analysis also shows that selling a monthly call option with a similar premium has the potential to generate approximately a 109% annualized return, assuming U.S. Steel closes at or above the strike price of the short call at monthly option expiration.
Chuck, how do you select stocks with the best profit potential for the monthly cash dividend strategy?
Marie, stock selection is important to the overall success of the monthly dividend strategy. Now, the strategy is profitable if a stock's price remains flat or even declines slightly, but I still like to trade stocks that are in a price uptrend to give me a little extra safety cushion. I use the crossover of the 50-day exponential moving average with the 100-day exponential moving average to determine price trend. When the 50-day EMA is above the 100-day EMA, a price uptrend exists. I also like to use the on-balance volume indicator to determine if a stock's price uptrend can be sustained. An upsloping OBV line indicates that the volume flow is heavier on up days and lighter on down days, indicating that the price uptrend is likely to be sustained. Here is a daily price chart for U.S. Steel. Note that the 50-day EMA, which is the blue line, is above the 100-day EMA red line, indicating the stock is in a price uptrend. And the on-balance volume line at the bottom of the chart is sloping up, indicating that the volume flow is heavier on up days and lighter on down days, confirming that the price uptrend is likely to be sustained. Here are a few more examples of monthly dividend trades for Hartford Financial and Western Digital. You can see that these stocks are in a price uptrend with an upsloping OBV line confirming the price uptrend. I am currently trading 10 different stocks with the monthly dividend strategy that are all in different industries, allowing me to diversify my portfolio. The monthly dividend strategy can also be implemented with bearish ETFs, allowing you to profit if stocks are in a price downtrend. My brokerage confirmation shows that I purchased Hartford Financial stock at $24.14 and sold the September 25 call at $140. And the buy right analysis shows that this monthly buy right trade has an annualized return potential of 172%. And I purchased Western Digital stock at $32.99 and sold the September 34 call at $101. This monthly buy right trade has an annualized return potential of 82%. So to summarize, the monthly dividend strategy can provide a great return with relatively low risk. The strategy does not require a large price movement in the underlying stock to be profitable, providing an excellent risk-adjusted return. The sale of the call option provides downside protection if the underlying stock declines in price, and the strategy actually incurs less risk than owning stock.
Well, Chuck, I hope our viewers were able to gain some valuable insights into the monthly income strategy. I want to thank everyone for viewing, and I am looking forward to our next presentation.